when prices are down, it also means that there's a lot of opportunities to buy great projects at depressed prices. And so we're excited. We're kind of active looking for good opportunities.
Yes. What's your ontology of the Memecoin space?
Are we building Web3 or are we building Fintech 2.0?
Are we building Web3 or is Web3 building us? Well, ladies and gentlemen, thanks for tuning into The Scoop. I'm your host, Frank Chaparro, and we have joining us on the other side of the mic and camera, Nick Matthew at Standard Crypto. Thanks for taking the time in what has been a pretty painful week for most people allocated to anything. But I guess you could say specifically crypto. How's business?
Business is good. I think, everybody's trying to figure out what Trump is doing and how tariffs are gonna settle and resolve. But at the same time, I think when prices are down, it also means that there's a lot of opportunities to buy great projects at kind of depressed prices. And so we're excited. We're kind of active looking for good opportunities.
Uranium.io, an entirely new marketplace for trading uranium and powered by Tezos technology, is live. As global energy demand rises and nuclear power becomes a key player in decarbonization, demand for U3O8 is increasing. But up until now, its access to retail investors has been limited. Unlike other precious metals like gold or silver, the traditional uranium market has high barriers with minimum lot sizes of tens of thousands of pounds that's limited retail participation. Tokenized uranium breaks these barriers, enabling anyone to own physical uranium with accessible pricing and no need for complex storage. Investing in uranium is now widely accessible, and you can learn more at www.uranium.io. For crypto and DeFi professionals looking to contribute to a team committed to innovation in digital assets, Fidelity Investments is now hiring. Why Fidelity? For starters, they've been exploring Bitcoin and blockchain since 2014. They were the first traditional asset manager to launch a native crypto business and among the first to launch a Bitcoin exchange-traded product. Innovation is in their DNA. Fidelity invests in their talents by supporting and developing associates through continued education opportunities, casual crypto-focused discussion groups, and on-the-job experience of working with new technologies. If you want to work on cutting-edge products and explore the new frontier of DeFi and blockchain, Fidelity is for you. Their products continue to improve and evolve, staying ahead of this rapidly changing digital asset landscape. So go ahead, explore Fidelity Crypto Careers today by going to crypto.fidelitycareers.com to learn more. That's crypto.fidelitycareers.com. Fidelity is an equal opportunity employer. I feel like I'm not quite, I'm distressed, but not depressed with this market. As a venture capital investor, how do these headwinds and just the sling and arrows of the market with everything happening with tariffs, how does that impact? Is that seeping into the private side?
It's definitely seeping in a little bit. I think the biggest thing is that, oftentimes founders try to time the market in the same way that some investors do. And I think when a lot of founders are thinking about fundraising, they go out and look at prices being down 5%, 10% in a day, and think, hey, maybe this isn't the best time for me to fundraise, just given all the uncertainty. And so I think deal flow slows down to some extent because founders who don't need to raise at this moment might decide, hey, like we should wait another month, 2 months, 3 months to see if things resolve. But I think there's always opportunities to look out for, and so we're still keeping busy even if things are a bit slower.
Yeah, it's an interesting point. Valuations, I think if you juxtapose like this quarter with last, I mean, it's almost trite to say that it's night and day. You're certainly if you're not seeing a slowdown in deal flow, you're certainly seeing a major slowdown in fundraising among funds, right? A lot of funds are trying to raise, but it's been very difficult. Is that your impression?
Yeah, I mean, I think it's always hard to say. And I think that, a lot of LPs look at the public markets as a kind of gauge of the hotness of the sector. And when public markets are down, I think LP interest is also going to slow down. But just as fast as prices can go down, I think prices can go back up, and LP interest can follow that just as quickly.
What do you think it's going to take for a turn? I feel like macro is really in the driver's seat, but are there any underpinning crypto specific characteristics that give you that proverbial light on the other end of the tunnel?
Yeah, I mean, I think there's always kind of endogenous and exogenous catalysts, and I think those can both be positive and negative. Um, I think there's all these exogenous factors at the moment, right? I think macro is having a big impact on crypto prices, and it feels like everybody in crypto is learning about macro in real time and spending much more time on it than they have in the past. I think that there are some endogenous catalysts that um, aren't aren't extremely fast moving, but are still quite positive for crypto over the long term. I think if you zoom all the way out and think about crypto from a very big picture, I think there's two things that are working very, very well right now. So one is I think Bitcoin is seeing real product market fit as a tech disruptor to gold. And there are a lot of institutions that, weren't buying Bitcoin or thinking about Bitcoin 2 years ago that are looking at it and buying it pretty aggressively today. And the other one is I think that there's a lot of exciting activity in the stablecoin world, mostly in the international context. So, B2B payments, B2C payments, C2B, really in all permutations. And I think that is kind of the foundational backbone on which a lot of kind of next generation crypto is going to be built on. And so those are the two areas where we're definitely seeing the most excitement.
When you think about Bitcoin specifically, right, this sort of heavy, high correlation to broader global equities and risk assets kind of pokes a hole in that gold hedge narrative that has long undergirded the asset. Um, what's the flip side to that? What's the counter argument to be made that because that kind of takes away a lot of those unique characteristics of Bitcoin, but what remains even without that tailwind?
Yeah, I mean, at different points in time, Bitcoin, I think, trades similar to different asset classes. I think there's some points where it's just super correlated to the rest of crypto. There's some points where it trades like a tech stock. There's other points where, it trades like a gold proxy. I think in the long term, a lot of people are thinking about this as this is this emerging disruptor to gold. But in any like short period of time, it might trade more similarly to some different asset.
Mm.
Whether it ends up successfully being the gold replacement, I think is very much TBD, but I think directionally that's where it's headed towards.
What are some of the signs or signals that illustrate the extent to which it is moving in that direction?
I think the biggest one is when you look at who's buying the asset and why they're buying it. I think a lot of it is large institutions, really all over the world who are thinking as this as being, hey, something we can sit on for 10, 20 years. And at the end of the day, more and more people are viewing this as a store value asset. And as people believe this is a store value asset, it kind of reflexively becomes so. And so as more and more institutions view it this way and start buying it, the probability that it does successfully bootstrap its way to being a gold replacement really, really goes up.
Like a self-fulfilling prophecy?
Exactly.
Yeah, that makes sense. And what does deal flow look like right now in terms of like the categories of companies?
Yeah, I think it's actually changed quite a bit over the past, say, 3 to 6 months, right? I think 6 months ago, everybody was trying to build something that could compete with Pump, some sort of meme coin launchpad, some sort of um, new flavor of coin launchers. I think after that, a lot of people were looking at prediction markets because Polymarket was on top of the world just before the election, and people were thinking about new mechanism designs, new markets that they could build around. I think since the election, um, we had the AI agent meta for a couple months. People were thinking about, all sorts of ways in which you can tokenize agents to give people exposure to that. I think in the past month or so, a lot of it has really compressed back into what people feel like is really, really fundamentally working, which is mostly stablecoins. Especially after the bridge acquisition, which I think was a big kind of wake up moment
Yeah.
for the whole world as to just how powerful these stable coins can be. So I think that is maybe like the hottest thing at the moment that everybody is thinking about how they can be a part of. But these things change, every 1 to 2 months. And so while I think stable coins are here to stay, I certainly don't think they're going to be the only thing. And I think in the coming months we're going to see a lot of other ideas as well.
So the age of token uh meme coin launches is in the rearview mirror.
Well, I'm somewhat optimistic that they're going to come back. I think that when prices are down, I think the interest in launching new tokens and the interest in buying new tokens always goes down with it. But as prices rise, I think there's a lot of people who, for better or for worse, love using a lot of these applications and playing around with a lot of these assets. And so I wouldn't write off meme coins as never coming back, but I think it's certainly a possibility as well.
I had a reporter reach out to me last week about meme coins, and I guess the impression of the outside world is that from the outside world is that they are kind of like this silly, weird thing that lose makes people lose a lot of money. Um, and I tried to sort of like walk through what I think is the most interesting aspect of meme coins, which is they're kind of financializing humor or culture or memetics to an extent. And in a way also creates like this new sort of capital formation mechanism where you can kind of raise money through something that is like a joke. So I think the one mistake that people in the outside world is they don't necessarily they view it very much they view all of crypto as like a monolith, but meme coins specifically are kind of also viewed as a monolith, like all just kind of being r- just this ridiculous, you know, stupid at best, criminal at worst. How do you sort of um, compartmentalize? Is that the word? Yeah. Or segment the meme coin landscape?
Yeah, yeah. I don't know if I have a great ontology for how to think about different classes of meme
Yes. What's
coins.
your
Um,
ontology of the meme coin space?
I don't know if I have a good one. I have some ideas about what makes a meme coin more likely to be successful or less successful. But I think at the end of the day, right, like what defines a meme coin is like there's not much more going on than the meme, and so it's really just a function of if it's a true meme coin, like what is the joke and
Is the
who's
joke
launching it,
good?
and is the joke good? Does it make you laugh? Is it a community that you want to be a part of? I think in some cases you have meme coins that are tied to some technological idea or trend, right? So when Truth Terminal came out, there were some meme coins associated with that that went quite well. And so there are a couple different shapes of meme coins. I think all the models can be successful. All the models are going to have a high failure rate. Um, but um, but yeah, I think at the end of the day, like a meme coin is just something that doesn't have much going on. That's what makes it a meme coin. And so it's really just its success is just determined based on how good is the joke and what's the value of the community around it.
I guess it's sort of similar to, I mean, if you think about the meme coin boom and bust cycle that we've just sort of underwent and are now kind of in the, wake of, just gives it's giving NFT boom bust cycle of 2021. That was kind of maybe, in hindsight, you could have looked at something like Trump as being uh, a canary in the proverbial coal mine. And then I think both sort of give us the opportunity as market participants to think through what what sort of lessons do we learn about that given use case and how can it be improved upon moving forward? Like even just thinking through the differences between NFTs and meme coins, the former I think has a more interesting there's a more interesting ability to it's a bit more tangible in a way where it's not as big of a deal if your meme coin goes to like basically be worthless because you still have like the image that you can kind of flex and be a part of. And there's more of a community. I mean, there is a community with meme coins, but I feel like it's less strong. Um, how do you think through the differences between those two segments?
Yeah, it's a very good question. Um, I think NFTs had this they almost like caught everybody off guard, right? Where they were just around for a few years. If you were really into them and you were a collector, you would buy some because you love them, and maybe some people expected them to go up a bunch, but I think a lot of people were just caught off guard with how far punks ran and how far some of these other collections ran. Whereas meme coins, they weren't totally new,
Hmm.
but I think when they came along, it was something that a lot of people saw much more quickly of how they could really explode as an asset class. And I think what that meant is that it advantaged insiders much more than
Hmm.
NFTs did. I think that a lot of people figured out like how to game the launch of new meme coins quite quickly. There were all these like really strong advantages to sophistication, and I think that that meant that overall it was actually kind of harder for a lot of outside people, a lot of retail investors to make more money with meme coins than they could for NFTs. So NFTs was just like this land grab. There wasn't really this like incumbent elite class that had a massive information advantage over other people. Everything was kind of free reign, whereas meme coins I think Pump kind of democratized launching assets to some extent, but I do think there were a lot of insiders who had much more information who were able to like rally people and attention around specific tokens better than others, and that meant that there was much more adverse selection for retail traders. Um, and so I think that that's honestly like the biggest problem with getting these meme coins now to come back as a meta. How do you do it in a way that's attractive for retail investors when they potentially have to worry about this adverse selection that at least in the beginning, didn't really exist for NFTs in the same way.
At the end of the day, like when you think about what is in the zeitgeist or what folks like us will track, it is what's making money in crypto in any given moment in time, not necessarily what will make a lot of money. And one thing that I've been thinking about these past few weeks is there's actually not a lot of like types of companies or projects, companies specifically, that make money in crypto right now outside of like stablecoin providers, issuers, exchanges, brokers. In a way, what's funny is that it's a lot of just the middlemen that crypto sought to sort of upend who are making the most money. And I feel like that needs to change. Like there needs to be that we need to have success in a more broad range of companies. I wonder what your thoughts are on the path to that.
Yeah, I think there are always kind of periods in technological development that are expansionary and others that are more contractionary. And I think in terms of breadth of use cases, we feel like we're in a bit of a contractionary phase where, people were thinking about the metaverse last cycle and they were
I
thinking
know.
about NFTs and they were thinking about all these random
I
crazy
love the
ideas.
metaverse. I was so into it.
Yeah, it was awesome. It was exciting. It was weird. And maybe it was too early or maybe it was flat out wrong, but it does feel like the breadth of ideas that we're
I was
really
buying
thinking
land and Sandbox and what was
for,
the other
for
one?
you know
Voxel?
for $20,000 a fake acre, or something like that.
I think I bought some for like 5 or 6 or something.
But we're certainly in this contractionary phase in terms of breadth of ideas. And I think really the crux of I think what the industry is trying to figure out right now is, are we building Web3 or are we building FinTech 2.0?
Are we building Web3 or is Web3 building us? Just kidding.
And I think at least directionally, like the market is shifting more towards us building FinTech 2.0. And that means that there's more emphasis on things like DeFi and stablecoins and payments than there
Mm,
are on weird kind of decentralized internet services, right? This is less about decentralizing the internet and more about building a new internet financial system.
this is interesting, Nick, because it's something that Kyle Samani, when he was on the program, outlined, made a very similar point about his firm's focus on a very specific. His point that he made on the program was exactly the one you made, which is crypto is really only going to be impactful to financial services. And I guess that that's sort of undergirded by this broader trend of maybe moving away from maybe the pie in the sky sort of Web3 internet revolution or retooling or reconfiguration. Like, is it fair to say that Web3 is kind of dead relative to what we called open finance or DeFi?
I don't think it's dead, and I don't think we're at the end of history for Web3. But I think that where we're seeing real, say, like exogenous pull or demand for products is on the FinTech 2.0 side, right? Mostly via things like stablecoins. But as those things gain an adoption, I think there's all these kind of second and third order effects of stablecoin adoption, right? So one is if everybody's using stablecoins for payments and they decide instead of just always off ramping their stablecoins, they're going to keep some of their stablecoin value on chain. Maybe it means that they start parking their capital into DeFi protocols or other kind of on chain yield sources, right? That's one second order effect.
Mm,
But I think there are all these other ones that could end up spilling over into Web3 or kind of slightly less explicitly financialized applications. And so I certainly think there's reasonable hesitancy as to whether like the time for Web3 is now versus 5 years from now, 10 years from now. But I certainly don't feel like it's quite time to completely rule it out.
I mean, even just thinking about stablecoin, like the basic question is, why are stablecoins having a moment? Like, what sort of androgynous factors led to where we are today? So, was it as simple as bridge being bought for a billion? What was it, $1 billion or something
I
insane?
think 1.1 or something. It was it
Okay,
was it's quite a big
yeah.
number, but um, I think stablecoins have been this sleeping giant for a decade, where they've just been
Mm,
compounding year over year over year, and it's been this silent trend that not enough people have been paying attention to. And so I think the bridge acquisition was less so of a like PMF inflection and more of just a wake up call for everybody about this really powerful trend that had been happening for a decade that most people had been under appreciating. I think what you can say about the bridge acquisition is even if you're one of these deep crypto skeptics who thinks
hmm
crypto is stupid and has no use cases, um, everybody thinks that Stripe is smart. Everybody thinks that the Carlson brothers know what they're talking about.
hmm
And so when they come out and say that stablecoins are, superconductors for payments, right? I think like it doesn't matter what you thought about crypto before. Like you have to acknowledge that hey, these guys understand payments pretty much better than anybody else, and they're saying that stablecoins are real and very important. And so I think it was a big wake up call for all those people. And I do think there's this way in which it reflexively accelerates crypto adoption because it probably means that, sales cycles are faster. Customers are more familiar with stablecoins because they had to read about what they are and what problems they solve after the bridge acquisition and so on. And so I don't think it's this like massive 0 to 1 moment, but I think it's an accelerant of what was a decade long trend that's continuing.
I think that's a salient point, Nick. And so, what does the future look like as it pertains to stablecoins? And then, how do you invest accordingly to how you see that future shaping out? Is every company going to have a stablecoin? Is there going to be the scoop stablecoin? Or will there be one stablecoin to rule them all?
Just Tether, um, or a government issued stablecoin. Um, I think it's really hard to say what fragmentation or consolidation is going to look like among stablecoins. Um, Historically, it's been really, really difficult for people to, build market share when USDT and USDC have such large liquidity moats. Um, but I think like moving forward, I think stablecoins are going to be increasingly fungible, and as long as like the collateral is high quality, I don't think a lot of people are going to care whether they're dealing with USDT or USDC
Mm,
or some other like more specialized branded stablecoin. And I think that given that issuance is such a cash cow and Tether is making an egregious sum of money, everybody wants in on that, right? And so I think there's going to be a lot of competitive pressure from them, and I think there's going to be a lot of companies that are pumping out incentives for people to use their stablecoin instead of Tether's, whether that's sharing the yield from the collateral directly or whether that's just giving other types of incentives. And so I'm certainly a believer that we're going to see a world of many stable coins, whether that's 10 or 100 or 1,000 or a million. I think that's still very much TBD. But I don't think it's going to end up being a duopoly in equilibrium.
hmm So, how do you invest? You know, accordingly. What are the bets you can make in that segment?
So I mean, you can invest in stablecoin issuers.
hmm
You can invest in companies who are building some sort of stablecoin API or orchestration layer. You can invest in companies that are using credit cards that have some sort of stablecoin implementation on the back end. There's all these ways in which it kind of looks like fintech, and just
Yeah.
at every part of the fintech stack, you can have some like crypto flavored version or stablecoin flavored version. Um, I think at the end of the day, what we want to see from a lot of those teams is some edge in distribution, some edge in who they know or their
Yeah.
ability to sell to businesses. And I think the scary thing is there's a real question of whether this is something that incumbents are advantaged on, right? I think like one of the biggest advantages incumbents normally have is that they just have better distribution because they've built up relationships, they have a really strong brand. And so if this is mostly a distribution game, where are the opportunities for startups versus what is this just a matter of, Stripe flipping on their
Yeah, Stripe and Bank of America just completely eating everyone's lunch. Where's the opportunity for the little guy to elbow their way in?
precisely. And so we think that there are going to be opportunities, but I think it's more of like it when you see it, where you meet a team, they have some
Mm.
insight as to what needs to be built in the world of stablecoins, and they have really strong founder market fit, and they have some distribution edge, and can move quickly enough to be potential incumbents that are second movers.
What do you try to identify in teams early on as you sort of make potential investment decisions?
I think the deepest one is some type of earned insight, right? I think there are a lot of teams that have some hypothesis about
Mm,
what the future is going to look like, but it's not really grounded in some deep knowledge that they have, right? It's almost like what we're looking for isn't people who have beliefs about the future, but like knowledge about the future that other people don't have, right?
mm.
They know what the future is
What's the
going to look like.
difference between knowledge and belief?
It's almost like the rigor behind their belief, right? Like they can like sit down with you and convince you that, hey, this is what the future is going to look like, but the rest of the world just doesn't know it yet. And what that typically looks like, the way in which somebody typically gets that is they have some like prior experience that led them to that insight. And then they realize, hey, like I know this thing that the rest of the world doesn't know. I'm going to go out and build it. Um, and so I think that's kind of the biggest one that we look for. But I think there are all these other kind of smaller things, right? Of like at the end of the day, it has to be a great market, right? It has to have some big opportunity associated with it. It has to be a founder that we think is really long term oriented. They have to be able to recruit a great team. They have to be able to do sales. So there are all these other things that we look for, but I think really the crux of it, the biggest one, is that they just have some earned insight about the future.
That makes a lot of sense. And in sort of like thinking about the firms that are coming to market now, how do they look different, not just from the market in which they're operating, but maybe where they're coming from? What does this wave of entrepreneurs look like?
I think there's a lot of people coming from a bunch of different backgrounds. I think the type of background that I'm most interested in is actually pretty different than I think what I've been interested in the past and what's been successful in the past. I think a lot of people talk about how you have to be crypto native, you have to understand the crypto game. That gives you a big advantage in understanding the right games to play and the right people to talk to and so on. I actually think that as crypto crosses the chasm over the next few years, it's actually an advantage in many ways to be an outsider looking in,
Hmm.
because I think the technology in the back end is increasingly fungible and the customers are increasingly outside of crypto instead of inside of crypto. And so if you are building something in stablecoins or, call it fintech 2.0, um, if a lot of your customers are outside of crypto, then I think having that background can be better than being the guy with like a cute little, pseudonymous profile who knows how to do a good liquidity mining program, right? And so we're still interested in founders of all backgrounds, but I think on the margin, being like an outsider with some like deep kind of experienced entrepreneurial background outside of crypto is actually better in many instances.
That makes a lot of sense. Because I think yeah, at the end of the day, like if we're going to onboard, the next billion people, none of them are going to have any, they're not necessarily going to care. They're not going to care about how it works underneath the hood.
Yeah, and people talk about tech debt and organizational debt. I also think there's this type of like ideological debt where like when you've been in some space for a very long period of time, you still have some of these old ideas that maybe you shouldn't have because they're unproductive or
What's an example?
I think that in most cases, most users don't care about decentralization, right? They care like they want convenience, right? I think like given the choice between convenience and some other property, users care about convenience 99.9% of the time, right? And so if you're building some like decentralized RPC because you think that it's like going to decentralize the stack, that's great from a like platonic ideal perspective. But like this is not what users want a better RPC. They don't want a decentralized one, right? If that is the trade off. And in most cases, it is. And so I think in many instances, not having that ideological debt allows you to kind of like see the opportunity more clearly understand what your users truly want, and then provide that to them better than, some alternative founder that still has a lot of these ideas in their head.
This plagues a bit of Ethereum to an extent.
To some extent, right? I think, Ethereum still is the biggest network by market cap. It still has the most liquidity. It still has the biggest developer community, and so it has a lot of things going for it. But I think, like, certainly it also has a lot of ideas that haven't really panned out.
Hmm.
Maybe the biggest one is, they planned for this world of 1,000 rollups that all settle to Ethereum, and a lot of these, at some points in time, were imagined to be application-specific rollups. And so I think there was this view that we're gonna have this decentralized global computer with 1,000 different applications that all settles to this one base layer. And I think what we're seeing, at least at the moment, is that there's not demand for 1,000 rollups, right? There's demand for, like, 2, Base and Arbitrum and maybe a couple others. Um, and that's largely the case because there haven't been 1,000 different applications, right? People want to swap, people want to borrow, and people want to do a couple other things. And when these blockchains are mostly about state instead of apps, there's really strong network effects around whatever few blockchains or rollups have all that proprietary state. And so there's massive consolidation in the market. And so when there's only a couple rollups because there's a power law outcome um, across all of them, there's only a couple that matter. Those have, like, all the leverage over Ethereum, and Ethereum's architectural model doesn't really make sense, in my opinion, for first principles when there's only like 1 to 2 rollups on top of it. So it is in a bit of a precarious position. I think that there's a lot it can do to get out of it, but it certainly made some assumptions based on ideas that I think ultimately haven't panned out in the market.
So, what do you think the next 6 to 12 months look like? What are you most excited about?
It's hard to say when it does feel like so much of the market is just being
Falling apart?
driven by macro, I would say, but I think macro is certainly driving things lower.
I'm just
Um,
waiting for the devs to do something.
we've got a lot of devs in our portfolio who are doing a lot of cool things. So, we're certainly still excited. Um, I think over the next 6 to 12 months, a lot of it is going to be um, people figuring out. Well, first of all, I think the biggest thing we're trying to figure out is, like, is the bull market over? Right?
Is
Is
it?
this It's very TBD. I think, like, macro is maybe like 50% of what's going to influence that. I think if we have macro and an endogenous catalyst, like some new use case or asset class, I think that could certainly take us into a second leg of a bull market. But if it is a bear market, I think a lot of people are going to look at everything that was built or talked about over the past cycle, and they're going to, like, go through that wreckage and figure out, like, what is still worth holding on to and which things should be discarded. And then I think there's going to be a ton of consolidation and refocusing around what are the kind of few ideas here that we talked about from this previous cycle that really are working and that are worth doubling down on. Um, and so, yeah, I think we're going to see a bit of a contractionary period in terms of the breadth of ideas that are explored. But I think once you have that consolidation around a small number of high quality ideas and markets, then I think after that, you'll see another expansionary period where people say, hey, like, stablecoins are going super well, Bitcoin is going super well. What are the things that we can build around those that can be successful off the back of those 2 projects, and vertical successes?
And we shall see. Hopefully, hopefully we don't have a. I mean, we've had too many bear markets. I mean, at a certain point, like we need to kind of shit or get off the pot and have a industry with real use cases that are global and ubiquitous.
Mm. I think the other thing that's happening right now that I'm super excited about is it does feel like we've hit an infrastructure inflection point where blockchains are fast, they're scalable. We have pretty good abstractions. I think things like Privy and Turnkey have made wallets super accessible. And so it's kind of like the first time in crypto's history where we're finally able to meet consumers where they are,
Hmm.
where, like, you can just download an app on the App Store, easily log in, easily on ramp some funds, and start playing with some crypto app. And that's really only been true for the past 6 to 12 months. And so, beyond stablecoins and Bitcoin, I think the thing that we're super excited about over the next, couple of years is all the experiments in consumer crypto that finally are able to reach mainstream users with a quality of UX that they would expect from any traditional application. And I think that that design space is still very underexplored, and we expect there to be a lot of exciting experiments that come out of it.
Makes sense. Well, we'll have you on when once we have clarity around the extent to which we're gripped by a bear market or propelling into a renewed bull cycle. We'll have you back on the program.
That'd be great.
Thanks so much for taking the time.
Awesome. Thanks, Frank.
Thank you.